Hi, Assalamualaikum warahmatullahi taala wabarakatuh. Now, we move to part 3 of the module. So under this part, we will learn about how to prepare financial statement. Alright, this is learning objective of part 3. The first one, after completing this topic, you should be able to understand the format for statement of profit or loss, and also statement of financial position. Second objective, you should be able to prepare statement of profit or loss. And then third objective, you should be able to prepare statement of financial position. Okay, this is the pro forma for a statement of profit or loss. Okay, first you write name of the business, for example, ABC Enterprise, Sejahtera Enterprise, and then followed by title, statement of profit or loss for the year ended, and then write the relevant date. Okay, normally end of your accounting period. For example, 30th November 2022, or maybe 30th June 2022. And then first item, you will record trading activities if your business involved with trading. Okay, we record sales revenue. The first item, you record sales revenue, and then you minus sales return inwards or sales returns. Okay, and then you will get net sales. Next, we record cost of goods sold. So item under cost of goods sold includes opening inventories, add purchases. Okay, here purchases refer to purchase of goods for resale. Alright, if you purchase motor vehicles, for example, but you are involved with trading activities, then purchase of motor vehicles means you purchase asset. So asset you will transfer to or record under balance sheet, statement of financial positions. Okay, next, last drawing of goods. If owner draw goods for personal use, and then you minus also or less return outwards, and you add carriage inwards. When you purchase goods, sometimes you have to pay carriage inwards as well. Okay, and then your import duties or tax on purchases. Okay, so opening inventories plus purchases minus drawing of goods minus return inwards, add carriage inwards, and add duty on purchase or tax on purchase, you will get cost of goods available for sale. Okay, cost of goods available for sales, you minus closing inventories, then you will get cost of goods sold, COGS. So your net sales, okay, minus COGS. Finally, if the answer is positive, means you will get gross profit. But if the value is negative, that means we suffer gross loss. Okay, second step of statement of profit or loss. Okay, we list down all non-trading activities in terms of revenue as well as expenses. Revenue we add from gross profit. Expenses we minus from gross profit in order to calculate net profit. So this is example of revenue that we can record. Okay, for example, dividend received, rental received, commission received, okay, your interest received on fixed deposit, bad debts recovered, discount received, okay, decrease in allowance for doubtful debt, and also allowance for discount allowable. Alright, and then we minus expenses. So expenses basically can be classified into 3 different categories. Okay, we have selling and distribution expenses, and then we also have administration and general expenses, and then we also have financial expenses. So you record accordingly. Okay, you have carriage inwards, advertisement, repair on motor vehicles, salesman commissions, under selling and distributions. All expenses relate to office or general expenses, you put under second category. For example, miscellaneous expenses, insurance, printing, depreciations of your office equipment, depreciations of motor vehicles, and then your electricity, water bills. Okay, and then any expenses that relates to financial matter, you record under third category. Discount, for example, discount allowed, bad debts, increase in allowance for doubtful debt, as well as a discount allowable, and then if you have interest on loan. Alright, so finally, just now, your gross profit, you add revenue, and then you minus all expenses, you will get either positive or negative value. If positive value means net profit, negative value refers to net loss. So either you have positive or negative results. This figure you will send to balance sheet or statement of financial position. Okay, this is your statement of financial position. So under this statement, you will categorize the item into different categories according to classifications of your accounts that you have learned under part 1 of the module. Okay, so the first one we have non-current assets. Under non-current asset, we have 3 different categories: tangible, non-current asset, investment, as well as intangible non-current asset. Okay, for tangible non-current asset, you will calculate accumulated depreciation. Okay, cost you minus accumulated depreciations, then you will get carrying value. Okay, previous term is net book value. And then you will have your investment, for example, fixed deposit, unit trust. Okay, your intangible asset, for example, goodwill, patent, and trademarks. So you total up. Okay, later you total up. Okay, next category under asset, we have current asset. Okay, current asset. Okay, and then your non-current asset, you add current asset, you will get one value. So this is actually capital employed, your total asset. Alright. Okay, next part of your statement of financial positions, you have owner's equity, long-term liability, and also current liabilities. Okay. So under owner's equity, we have capital, and then just now from statement of profit or loss, either you have positive, negative results, you will transfer to statement of financial position. If positive, means you will add with capital. If negative, put in bracket. That means your capital, you minus net loss. Okay, and then you minus drawings. Okay, you minus drawings. So drawing here consists of both if you owner draw goods or if owner draw cash. Remember, if owner draw goods, you record under statement of financial position. If owner draw cash, it will reflect drawing accounts as well as cash accounts. Okay, next category, long-term liability. For example, 10% loan. Okay, and then next category, you have current liabilities. Okay, all the liabilities that you will settle down within 1 year's period. Within 1 year or 12 months period, you will categorize as current liability. Okay, then your owner's equity, you plus long-term liabilities, you plus current liabilities, then you will get one figure. So this figure must balance with total asset. Okay, now let's look at illustration. Okay, how to answer this question. So if you look at the requirement, okay, you are required to prepare statement of financial position and statement of profit or loss. Okay, so the first step before you can prepare that two statement, first you must analyze all the accounts title that they give you. So this is your accounts title. This is list of account title. So you must analyze whether number one, that accounts will be sent to statement of profit or loss, or old terms P&L. Okay, P&L, profit or loss account. Number two, whether you will transfer that figure to a statement of profit or financial position. Okay, statement of financial position. Or old terms is known as balance sheet. Okay, now let's do it together. So office equipment at cost. This one you will send to profit or loss. Okay, under non-current asset. Same goes to motor vehicles. You will send to profit or loss. Not profit or loss. You will send to these two items. You will send to balance sheet. Balance sheet under non-current asset. Tangible non-current asset. And then accumulated depreciations for office equipment and also motor vehicles. This one also you will send to balance sheet under tangible non-current asset record as accumulated depreciations. And then you have inventory as at 1st January. Okay, inventories as at 1st January. This one you send to profit or loss under COGS. Okay, COGS. Okay, then you have sales, purchases. Sales you send to P&L. Purchases also you send to P&L. Sales under revenue. Purchases under COGS. Insurance expense under P&L. Electricity, water, telephone bills under P&L. Custom duty, carriage outward, carriage inwards. Motor vehicle expenses. This one also under P&L. Return inwards, return outwards. Discount allowed, discount received. Advertisement, advertising expense, rent, staff salary, stationery expense, staff sales commission, that's. These are all items that you will send to profit and loss, either as revenue or expenses. Okay, so when you send to P&L, make sure you know where to transfer the figure. Is it under sales, the first part? Is it under sales minus sales return? And then you will have category COGS category, and then you will have non-trading activities, either revenue, or non-trading activities, either expenses. Okay, under these expenses, you have 3 different categories. Okay, for balance sheet item, remember you have tangible, you have asset, non-current asset, and then you have current asset. Okay, under non-current asset, you may have tangible, non-current asset, investment, or maybe intangible, non-current asset. Okay, and then second category, you will have owner's equity, long-term liability, and then third category, current liability, or this one sometimes known as non-current liability. Okay. Okay, and then capital is owner's equity item. Accounts receivable. Okay, owner's equity is balance sheet, balance sheet item. Accounts receivable, accounts payable, allowance for doubtful debt, bank drawings, fixed deposit, bank loan, investment. These are all actually balance sheet item. Interest received on fixed deposit, this one under P&L. Okay, revenue, record as revenue. Okay, and then notes number 1, closing inventories. This one you record under P&L. Remember COGS. Okay, and also under balance sheet you record as current asset. Okay, now you are ready to prepare your income statement of P&L and also balance sheet. Okay, so this is the step, as I mentioned just now, step on how to prepare financial statement. The first step, you analyze accounts title in the questions. Second step, you identify and record all accounts for statement of profit or loss. And then third step, you identify and record all accounts for statement of financial position or balance sheet. Fourth step, okay, you calculate gross profit and net profit from statement of profit or loss, SOPL, and then you send to SOFP, statement of financial position or balance sheet. So final step, you balance off your statement of financial position. Make sure your total asset equivalent to total liability. Okay, this is suggested answer. Okay, your net profit you send to balance sheet. This one. You send to balance sheet. Okay. And then your this is your balancing figure. Alright, that's all. Bye. Assalamualaikum.